things well in time, and you're already looking at a pre-poned winter session and a pre-poned budget session if that is happening. And if this is what it is, then I see 1st April to be achievable. But in case there is a slight delay about 2 to 3 months, that could only be caused only because of the IT infrastructure and the lack of consensus on the final legislation, which will have to be accepted by each of these states.
All right, Krishan and Ajay, both of you gentlemen, we'll leave it at that. Thank you so much for taking time out for us. We'll keep this story alive. The consensus on GST rates, without a doubt, giving a big fillip to that landmark tax reform in the work. But remember, the big hurdle now is the question of control. States are vying to keep control of at least the small businesses, but the centre is seeking a full role in administering GST collections entirely. Finance Minister of Kerala, Thomas Isaac, spoke exclusively to ET Now's Gaurang Sinha. He says that states want shared control of services as well. Here he is.
Services won't go beyond 18. Absolutely. So the services will be distributed between 12 and 18. Right. And the Secretary's Committee would be making the draft report on this.
Obviously, we're discussing dual control tomorrow, but at this point, sir, do we stand by the earlier understanding that services will continue to be administered by the centre, or is that's not something you have a different view on?
Today, the centre has had its way, right. But tomorrow, I don't think any of the state would be willing to compromise the demand that below 1.5 crores turnover, both in goods and services, should be entirely the domain of the states. And above 1.5 crore, it will be jointly administered by centre and state, modalities of which would have to be determined later.
An idea to cross-empower the centre and the states. How do you feel about that at this point? Do you feel that's a workable idea?
The centre's position was the entire service tax would be administered by them. That is not acceptable. Will never be accepted. Right. But then how cross-empowerment has got to be? Right. Well, it depends. Census says that you select a 5% sample. Right. Depending upon risk factors, is allotted to centre and state, right. Who would do the auditing and so on. Absolutely. Well, something of this arrangement has to go to come.
Okay, there's clarity, of course, that will emerge in the course of the week. But let's also get you some corporate reactions, especially what FMCG companies are making of these tax rates and whether or not this will indeed give a fillip to the consumption story. Hear out top CEOs and exclusive conversations that we had with them.
Impact on a company will be known only once the classifications come out. So while the rate, while it is important, even more important is the classifications, because in a company like ours, which has got such a wide array of products, ranging from Ayurvedic medicines to food and to cosmetics and toiletries, the classification assumes crucial implications. And as of now, there is really no clarity which we have in terms of what goes where. We'll know in a week's time, and that would really, we will know the impact on our company at that point in time. I think one can expect a fair amount of disruption, fair amount of initial chaos when the GST implementation begins. We saw it in the VAT implementation, but hopefully things will settle down very quickly.
I think this 4-slab structure, or rather the 5-slab structure, including the zero, is a very good move. What it does is the government has managed to, at one hand, ensure revenue neutrality. On the other hand, it has ensured that the common man is protected from inflation. What will happen essentially is there will be alignment of the current tax incidence to the slabs because they are close to each other. More than anything else, I think overall it will make life simpler. And thirdly, a lot of FMCG players compete with a lot of unorganized players. I think with compliance, it will help. So I think it's a very good move for the industry. And the biggest thing which is important is that it has protected the common man from any inflation impact.
I think overall these 4 rates are reasonable. However, the final point will lie in how various individual categories of products are put into each of the rates. That's very important. 28% is quite high, and I don't agree that the current rates are as high as 31%. It varies from product to product, but until we see the final actual fitment of each type of product, into each rate category, it's difficult to comment. I don't believe that the compensation required will be anywhere near 50,000 crores, because what the government is forgetting, what the entire council is not taking sufficiently into account, is because of the nature of the GST, evasion of indirect taxes will come down dramatically. My expectation is collections will be huge. My expectation is that the states, by and large, except for 3 or 4 states, will not need to be compensated. So my feeling is these additional cess, and he has mentioned that also, that he would gradually take it off in 5 years' time, definitely. I hope it will come off soon because that's what is going to lead to a lot of economic development.
The whole exercise is revenue neutral. It's protecting people at the lower end, and because of efficiency gains, I think that on balance, both for the poorest and overall, it will be revenue more than revenue neutral.
Let's slip into a short break. When we come back, we'll talk about the market action today with Sampath Reddy of Bajaj Allianz Life Insurance.
Presented by Kurl-On, India's largest selling mattress since 1962.
What a goal! The crowd is going nuts.
बैचलर चरण हर गोल पे करता था हल्ला बोल, पर शादी क्या हो गई, एक गोल ने ही खोल दी पोल।
Sorry.
बॉस, कुछ चीजें शादी के बाद बदल जाती हैं, इसीलिए कर्ल-ऑन स्प्रिंग मैट्रेसेस में है कर्लोपीडिक टेक्नोलॉजी, so body movement on one side does not disturb the other, because these kind of things matter, yeah. Kurl-On, when a mattress begins to matter.
We bring happiness into your life. South Indian Bank. Experience next generation banking.
कोश के पेट में
ढेर सारा हेल्थी
बढ़िया वाले ओट्स से बना कोश आटा मिलाइए 1 मुट्ठी कोश 3 मुट्ठी गेहूं के आटे में। अब रोटी यमी पेट हेल्दी कोश, रोटी के पेट में कोश, आपके पेट में जोश।
From connecting the world to enabling over 1 billion conversations a day. From building your homes to the highways that get you there. From styling your wardrobe 3 outfits every second to bringing you the world of fashion. We are a big part of your life because we know every small moment is big for you. Aditya Birla Group. Big in your life.
The prettiest makeup. A Hollywood makeup artist. The glitziest nails. And secrets from Ayurveda. Discover the best in beauty this week on Luxury Time.
In association with Luminix Uno, 4 times more precious and desirable.
India's largest and only daily platform for MSMEs is rewarding India's best micro, small and medium enterprises. If you are a company with a turnover of between 4 crores to 400 crores and think you qualify to be crowned India's best MSME, get in touch with us on Leaders of Tomorrow Awards at timesgroup.com. Or head over to our website www.leadersoftomorrow.co.in for more details. Call for entries opens on October 3rd and closes November 4th. Be prepared to be crowned India's best MSME in a glittering event on December 13th.
सॉरी बेटा, मैंने तुम्हारे बूट जलाए। मैं तुम्हारे सपनों को समझ नहीं पाया और तुम्हें सिर्फ किताबों की ओर बढ़ाया। पर फिर मैंने देखा तुम्हारे अंदर का जोश, वो जुनून, हर दूरी, हर रास्ता पार कर जाने का जुनून। मैनचेस्टर यूनाइटेड ड्रीम टीम में खेलने का जुनून, क्योंकि असली हीरो हार नहीं मानते। Apollo, go the distance.
Papa, we are receiving calls from the bank repeatedly. Have you not yet repaid the loan?
Beta, market condition is not right.
No, Papa. Whatever we are today is only because of Dena Bank's help.
I'll get in touch with Dena Bank right now.
Back on Smart Markets, and let's take a look at what's happening as far as global equities are concerned. After a short-lived recovery, global markets are back to their nervy ways somewhat, but at least stocks on Wall Street are managing to hold their head above water. Remember, fears over the US presidential election outcome continues to linger. So while it turned out to be a pretty mixed day for Asia, Europe seems to be, dancing to its own tune. Right now, indices are struggling for direction. But that's also because a UK court has ruled that Brexit now needs parliamentary approval, and that effectively means that UK's divorce from the rest of the EU could very well now go into the next year or so. And that's perhaps why you're seeing the pound up a good 1.2%. Losses for the dollar, though, are continuing to deepen. This is despite the Federal Reserve keeping a December rate hike as an option very much on the table. Remember, in last night's FOMC statement, the American Central Bank offered a positive assessment of the economy and also said that the case for a rate hike continued to strengthen. But of course, nervy trades, Ajay, continue to remain, and I suppose we'll go one way or the other once we have, a victory on our hands.
Tanya, it's very interesting to see, at least after a 7th straight day of decline, the US markets are finding their feet. Today they are taking in the green, and by the looks of it, there is some amount of calm returning, because even the CBOE VIX, almost 21% rise in the last couple of days, is coming down by over 1% today. So it clearly indicates that some calm is coming back, and people are kind of factoring in that nothing is final till a result is actually out. On the other hand, they seem to be pricing in a rate hike in December, so that is also getting factored in. But Europe is actually the big story. Despite of the commentary or the news flow around Brexit, perhaps a hint of a delay, actually it should have otherwise brightened up the European equities, but that's not turning out the case. Perhaps the earnings are weighing in. The pound actually is gaining, which is good news. Even on the currency side, dollar index, which had fallen to almost 95, is back to 97.5. So that's good news. Currencies, emerging market currencies today led by peso, because of news that Hillary is leading once again, were actually leading the gains in emerging market index. There was some news flow in Egypt also, which has completely made their currency free float. So emerging market currency was a very bright spot in overall global cues, and so is US. Europe is kind of confusing right now, unable to understand why European equities are taking that news flow on Brexit negatively.
Okay, let's chat with Sampath Reddy, who is Chief Investment Officer of Bajaj Allianz Life Insurance, and he's joining in here on the show. Mr. Reddy, good evening. Thank you so much for taking time out for us. Let's first talk about the US presidential election outcome and the event risk that lies. Investors around the world are on tender hooks. How are you viewing this event and going into it as a market participant?
No, I think, obviously the Republican Party seems to, be a little bit more protectionist kind of a policies that they are going to have. It seems that at least, all throughout the campaign, they've been clearly highlighting that, Mexican borders and so many free trade agreements they will review, and, probably some of the manufacturing, they will try to bring it back to the US, and all of that thing, been talked about by the Republican Republican candidate. So in that backdrop, if they were to win, how will it have an impact on other countries, especially like emerging countries like China, India, even other countries who are dependent a lot on exports to the USA will have, could have an impact. I think that could be the real cause of worry for most of these emerging markets. I think that will remain. So that's what I think is playing out in the markets of late. I think going forward, from obviously till the time election results are out, and also the Fed meeting in the December. Overall, next 1 to 2 months is going to be volatile in the market, and one has to see what would be the election outcome of the U.S. presidential this thing, and after that what kind of if there is a change of guard at the this thing, how will they take forward? One has to wait for that. Yeah.
Right. Mr. Sampath, earnings growth is kind of broadening out. At least the 35-40% of the numbers released so far shows that. Do you think it will gather pace in December quarter onwards, once the festivity is completely in the system, and even extra money in the system because of OROP and the pay commission, and of course better monsoon in the rural side?
No, I think so. I think it's it is improving. Earnings growth situation is improving in the Indian market, and but for the 1 or 2 financial companies, especially the Axis and all, Axis Bank and all, the growth would have been a lot better for the Nifty companies or the top 100 companies. I think all of these things will be behind by the third quarter, maybe certainly by March you could see good growth coming in the Indian corporate earnings growth as such. There are pockets of improvement which is within the financials and infrastructure space, and consumer, especially consumer sector also, on the negative side, consumer sector also has seen a little bit of a deceleration in earnings. Overall, taking on an aggregate basis, I think earnings growth is coming up. Earnings growth is at least inching towards better, higher and higher growth. Overall, for the full year, probably about 15 to 16% growth should be easily doable. That's what I think we are of the opinion. Yeah.
Mr. Reddy, when you look at the market right now, and in the segments, the large cap segment, the small cap, and a mid cap, on valuation terms, do you see this earnings recovery which you were talking about kind of getting in the price, or is it partially in the price and still there are pockets where prices can appreciate? How are you looking at all of that?
I think to some extent, probably some of the mid caps are already pricing in for a good growth, even after assuming about a 20-25% earnings growth for the next 2 years, 17 and 18. A lot of these mid-cap companies are trading at a multiple of around 25 times or something like that. So there is, and some, quite a few large number of mid-cap companies. I think good amount of growth recovery is already factored in. I would think a lot of larger cap companies, especially in the Nifty 50 or maybe top 100 companies, where growth recovery is not yet factored in. I think larger cap companies are much better positioned vis-a-vis the mid cap companies.
Let's talk about the potential of earnings and returns over the next 2 to 3 years.
No, I think not really. The best is yet to come. I think we have a very, very long period of likely to have a long period of a good growth, much higher growth, about 15% per annum. If you look at our own corporate earnings growth, by and large, Sensex returns as well as corporate earnings growth in the longer period of time, maybe 15-20 year perspective, has been in the range of about 15%. So, but the same, if you were to look at the same in the last 5-6 years, earnings growth, they are pretty much in the single digit. I think the large phase of consolidation or a low growth period in terms of corporate earnings wise is behind. Probably the next 5 years would certainly be more than 15% CAGR earnings growth we could have. If we were to continue to have, let's say 10 years of a long-term CAGR of 15% growth, obviously not last 5 years has not been that good. So probably next 5 years have to be better than that. So, on a simple arithmetic. So certainly I think, next 5 years will be a lot better. India in terms of, demographics and in terms of growth index wise, if one were to look at it, 15% kind of earnings growth, we would probably have another 10 years or so.
Mr. Reddy, give us also a sense of, what conversations with company managements these days are looking like. Are they seeing utilization sort of improve? What is your own observation across segments?
Right, right. Mid-cap companies, the utilizations levels are not really at the optimum levels at this point of time. That's why I think we do not think an immediate capex related activity will pick up.
Alpha seems more elusive today. Is it because so many go after it the same way, chasing after short-term returns? Instead of getting caught up with the crowd, the investment managers at PGIM take a long-term view, teaming specialized active investing with risk management rigor to seek out global opportunities. We manage over $1 trillion this way, attracting many of the world's leading investors. Partner with PGIM, the global investment management businesses of Prudential.
Growth coming
There is
from
some
the
growth.
existing
There is a bit of
capacities and
inflationary pressure put.
more of margin operating leverage expansion. That is what will drive the growth.
They're going to be very tentative. I think.
All right, Mr. Reddy, we'll leave it at that. Sampath Reddy of Bajaj Allianz Life Insurance joining in here on the show. Thank you so much for taking time out for us. Let's move on and get you the latest in the Tata Mistry spat that's heading, let's just say, for a final showdown. And that's because we hear that the Ratan Tata camp is quietly working on plans to remove Cyrus Mistry as chairman of group companies. The move is significant given that Mistry continues to be the chairman of Tata companies even after his removal as chairman last week. Utkarsh Chaturvedi is joining in with exclusive details. Utkarsh, tell us what you're picking up. What is Tata Sons' strategy to remove Mr. Mistry as chairman of group companies?
Tanya, what we are picking up from our sources is that Tata Sons and representatives of the Ratan Tata camp have made calls to all the independent directors on board and have asked them to help them to remove Cyrus Mistry out of the boards of the respective companies. Now remember, there is no mail conversation, there is no letter which has been sent, but some cold calls have been made to all the independent directors, telling and requesting them to help the Tata Sons remove Mistry out of the board. Remember that the executive directors are someone who will anyhow be on the sides of the Ratan Tata camp, the Tata Sons camp. It's the independent directors, the non-executive ones, which are there, which the Tata Sons camp have to really pursue to get Cyrus Mistry out of the board. There are a lot of companies, a lot of listed companies where Cyrus Mistry is still the chairman, whether it be Tata Motors, Tata Steel, TCS, Indian Hotels, and all the board meetings are coming up because of second quarter results, and there it is when the whole issue of putting Cyrus Mistry out as the post of the chairman will come. So this is clearly an important week where all the board meetings will start. Remember, this is not a very easy process head on. They'll have to really pass a resolution, and an EGM has to be called for the whole process. But clearly, Tata Sons has started doing its groundwork here, quietly speaking to all of the non-executive directors. And what we were expecting, what we picked up from our sources was also that Tata Sons were expecting that Cyrus Mistry will really resign on his own accord, but that never happened. So clearly, now this is the plan B, which they're working. Clearly, they cannot put a lot of things on record here. In fact, when we spoke to Tata Sons, they declined to comment on this story. But clearly, what we're picking up from very credible sources is that work on the backdoor has started being done.
Thank you so much for that, Utkarsh. Utkarsh Chaturvedi there joining in with the latest. Now, even as Ratan Tata is turning to the government to resolve the long-standing Docomo tussle, sources tell us that the government may not budge on its stance regardless of who is at the helm of the Tata Group. Ruchi Bhatia is joining in with more details. Ruchi, there was talk about how, the Tatas is reversing course, hoping that
The biggest business stories in the news right now. Worker productivity in the U.S. rose in the third quarter by the most in 2 years. Productivity up 3.1% after falling in the second quarter. Now that represents a break from the longest string of productivity declines since 1979. Economists are attributing weaker productivity to a number of reasons, including a lack of capital investment. The number of Americans filing for unemployment benefits rose slightly last week, at the highest level now, though, in almost 3 months. Initial jobless claims were up 7,000 to 265,000. They have been below 300,000 for 87 straight weeks, the longest streak since 1970. October's jobs report is out tomorrow. And Swiss watchmaker TAG Heuer will open an office in Silicon Valley. The move will cement the company's smartwatch alliance with Google and Intel. TAG Heuer's office will be located on Intel's campus in Santa Clara, California. The company has hired an Intel executive to run its smartwatch program. And that's your Bloomberg Business Flash. Let's head now to the markets desk where Bloomberg's Julie Hyman has the latest. Julie.
Yeah, and I'm looking at some of the losers that we're watching in today's session on earnings. Facebook chief among them, as you might expect. That stock is weighing on the NASDAQ in particular. Facebook's numbers look good. Its sales, I should say, were up 56%. That's the fourth straight quarter of 50% plus growth. However, the company says that momentum is not going to continue, and your Facebook feed will soon have a slower percentage of ads on it. That's one of the changes the company's making. The share's down 4.5%, but a lot of analysts coming out today and saying this is a buying opportunity. If you look at ANR on the Bloomberg terminal, you'll see that Facebook overwhelmingly has buy ratings here. That is the green bar, even though we've seen the buy ratings go down to some extent versus the neutrals in beige and the sells in red. There's also a wide gap here. See, the shares are down 17.5%. If it's just producing these solar modules, it's essentially a commodity business, and there's an index that tracks the prices of these solar modules. If you look at it over the past year, you will see the tumble that it has seen, down 29% year over year. And a quick mention of Wynn Resorts after its Wynn Macau unit, that's of course the casinos based in Macau, reported disappointing numbers, dragging down the parent company by more than 7.5%. Mark?
Julie, thanks a lot. And that Facebook chart could definitely have been a contender for BOTC, Battle of the Charts. Still ahead, Wells Fargo facing an SEC investigation. We've got new details about the bank's sales culture that led to the opening volley of millions of fake accounts.
Right. Mark, happening right now as well. President Obama is campaigning for Democratic nominee Hillary Clinton. He's in Miami, Florida. Now, of course, that's a key swing state up for grabs before Tuesday's election. You can watch the president's remarks on Bloomberg at Live Go.
If you are just watching on television, or you're not from around here, and you're trying to figure out, well, where else could I vote? Then you go to...
When you travel, you want your needs to be understood, no matter where you go. You want an experience that feels highly personalized. With Watson on the IBM Cloud, travel companies like Wayblazer can apply cognitive analytics to social data to understand what a destination is really like and who exactly it will appeal to. Today, Watson is helping businesses create experiences that revolve around you, because that's what the IBM Cloud is built for.
You don't get anywhere in life by sitting still. It's the doing that takes you forward. So whatever inspires you, this is the time to fulfill it. And the best preparation for tomorrow is building a strong portfolio today. iShares Core Funds can help you keep more of what you earn every step of the way. Inspired to build. iShares by BlackRock.
Visit iShares.com to view a prospectus, which includes investment objectives, risks, fees, expenses, and other information that you should read and consider carefully before investing.
Forged from its deep-rooted business tradition, the Finger Lakes region is poised to cement a new place for itself as a destination for new talent and new industries.
Technology that we have, the people, the training, the institutions that allow us to get a good talent pool is amazing.
We have ideas coming from every corner of this community, and it's a wonderful place to be.
There's something about this region. It keeps evolving.
Finger Lakes Forward. Come see the future of business.
I'm Vonnie Quinn in New York.
And from London, I'm Mark Barton. This is Bloomberg Television. Now, Wells Fargo says it's under investigation by the SEC. The bank disclosed the probe today in a regulatory filing. Wells Fargo's faced criticism and close scrutiny since agreeing in September to pay $185 million over claims employees opened as many as 2 million fake accounts. Joining us now is Bloomberg banking reporter Laura Keller. She and her team recently interviewed former and current Wells Fargo employees. Laura, hello. What did you discover?
So, Mark, as you said, we talked with these different former and current pretty high-level people, actually. And what we found was this, we just chronicled this sort of move from lower ranks and getting promoted into, say, California, for example, or specifically Southern California, and then moving on from that, this generation of managers being pushed and promoted to other parts of the country. So Texas was a focus for us, and Florida was a focus. And while this was happening with these, major executives, or what became major executives, then, you also had the bank talking about firing 5,300 low-level employees because of all these accounts and abuses that were happening underneath these managers that were rising across the bank.
Meanwhile, what's Wells Fargo doing to restore trust?
So there are a couple things going on. There's actually really a lot. The bank itself is conducting some investigations internally, and then also the bank's board has been doing investigations as well. They've hired an outside law firm to do that. Now, some of that, Mark, is necessary because the Consumer Financial Protection Bureau, which is one of these agencies that had fined the bank, plus the OCC, has said, look, we need you to do these investigations. You're required to do it. It's part of the order. But the bank is taking additional steps to try to rectify some of these abuses.
Now, we know that John Stumpf is gone, stepped down after a while. I mean, he didn't step down immediately. What about this cadre of executives that you say thrived in this kind of sales culture that we now know to have been maybe not completely corrupt, but at least questionable? Have there been any identified to get the door?
Yes. So, Vonnie, we don't have any specific names in terms of who this might be, but we did learn in our investigation that the company executives, the higher-ups, have identified some managers that they would like to fire over this, but we also understand that those firings are being held off from taking place now because there are those investigations going on, and they essentially would like the cooperation of some of these people before they were to actually possibly terminate them.
Right, and can these people turn around and say, well, this was the culture, this is what was expected of me? Can they?
I'm sure there would be some defense there. We'll have to see, what exactly the investigations find, exactly what it is each person might have done. And then I'm sure those processes will have to play out.
But Laura, there are some staffers that are firing back, yes?
Yes, very much. I don't know if we have a graphic here, but in the story we had one really looking at a lawsuit, a class action status lawsuit. It's seeking that status, looking at, individual employees, ex-employees that are seeking to join that suit. California was the highest. We've also got Florida on there. I think Texas was one of them too. A couple of other states where we just see a very large number of ex-employees who are trying to join a suit together. I think the law firm interviewed 500 potential joiners to the suit.
Laura, great story. Thank you. Laura Keller there, banking reporter for Bloomberg News. Vonnie.
This is Bloomberg.
You really crushed it.
don't get anywhere in life by sitting still. It's the doing that takes you forward. So whatever inspires you, this is the time to fulfill it. And the best preparation for tomorrow is building a strong portfolio today. iShares Core Funds can help you keep more of what you earn every step of the way. Inspired to build. iShares by BlackRock.
Visit iShares.com to view a prospectus, which includes investment objectives, risks, fees, expenses, and other information that you should read and consider carefully before investing.
From being in every second can in the world, to shaping automobiles, from securing futures, to empowering over 7 million dreams. From styling your wardrobe, 3 outfits every second, to bringing you the world of fashion. We are a big part of your life, because we know every small moment is big for you. Aditya Birla Group. Big in your life.
There's a new home for the businesses of tomorrow. Central New York has become a booming hub for new technologies and pioneering startups.
The momentum in this area is unstoppable.
This is a community that is very prone to innovation. As a business, being able to bring on amazing people, it gives me a great sense of pride to know that they're right here.
It's a great environment to live in, raise a family, and to have a business.
Central New York Rising. Come see the future of business.
Through the cloud, all over the world.
The business model is completely different.
Yes, it is.
How are we going to handle all this?
We aren't.
People who know BDO.
From Bloomberg World Headquarters in New York and London, I'm Bonnie Quinn.
And I'm Mark Barton. This is Bloomberg Markets on Bloomberg Television. Let's check in on Bloomberg First Word News today. Courtney Donahoe has more from our newsroom in New York.
Well, hey there, Mark. France has opened a one-stop shop to attract British companies fleeing Brexit. The French government wants to make it easy for businesses looking to set up new European headquarters as the UK prepares to leave the European Union. A new office will help companies navigate the administrative hurdles involved in relocating. In South Africa, calls for President Jacob Zuma to resign over alleged corruption are increasing. A new report by the country's graft ombudsman say that Zuma and some of his ministers may have breached the government's ethics code. The report has ordered an investigation into their dealings with the prominent Gupta family. Donald Trump's campaign ramped up advertising buys by 340% last month. Still, there were more anti-Trump TV ads on the air. The Trump campaign spent an estimated $45 million on TV ads in October. That's according to a Bloomberg BNA analysis of Kantar Media CMAG data. Hillary Clinton also boosted ad spending to about $50 million. More than 16 million people in the U.S. have gotten health insurance since Obamacare's coverage provisions started in 2013. That's according to a survey from the Centers for Disease Control and Prevention. But progress has been less and less each year, and now it's slow to a crawl. If elected, Donald Trump is promising to pull the plug on Obamacare. In sports, the Cubs have returned to Sweet Home Chicago after winning their first World Series in 108 years. A caravan of team buses was welcomed by a raucous crowd outside of Wrigley Field early this morning. Cubs first baseman Anthony Rizzo showed off the World Series trophy for the cheering fans. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Courtney Donahoe. This is Bloomberg. Vonnie?
Courtney, thank you. Burlington Stores, BURL, the ticker there, takes a dip lower this morning, now down around 3% after Spruce Point Capital Management takes a new strong sell on the retailer. The fund cites concerns over accounting practices, store data, and a significant turnover in management. For more on the firm's new position, I want to bring in Ben Axler, founder and CIO of Spruce Point Capital Management. Ben, you could say about a lot of retailers that they're doing not so well in this environment, that they're under pressure and that they're desperately trying to seek out some kind of top-line growth, bottom-line growth. What's different about Burlington?
So first of all, Spruce Point Capital Management, we focus on research activism. We take a forensic financial viewpoint. We heavily scrutinize the accounting assumptions and the financial presentation that the companies are using. In the case of Burlington Stores, we found a few things that have caught our attention that are signaling a slowdown in the earnings. Number one is their gross margin. It's presented in a non-standard fashion. They don't include occupancy costs. They used to disclose them down in the SG&A line. They stopped disclosing that. Another key metric that management's been touting is the inventory turnover. The inventory turnover definition is also non-standard. Management has recently stopped disclosing that on a quarterly basis, and so that has us concerned. And another issue as well that we think investors really need to think about are the unit economics for the stores. At the IPO, the management talked about the new stores costing $1.6 to $1.8 million, and they made statements such as the fact that a majority of their stores had positive adjusted EBITDA. They stopped disclosing that.
Now, why did you begin to address this now, and what has management said to your concerns?
So we saw a few things that really caught our attention. Number one is a clawback policy was put in place earlier this year that involved taking back bonuses in the event of fraud or financial misstatement. In addition to that, management started selling stock. Now, management only owns 2% of the company, so selling down from 2% to much lower shows us a little breakage of the incentive structure. But more importantly, we started to see some unusual evidence of lower quality earnings. They booked a sales tax credit in Q1. We did a Freedom of Information request with the New Jersey Economic Development Authority. We found out the transaction was booked last year legally, but yet the company deferred it to the next fiscal year, which allowed them to beat earnings. So when we see things like this, we get concerned about the quality of the earnings.
Ben, hasn't there also been a significant turnover of management? What's behind that?
Well, we're not really sure. That's a good point you made. Many of the key executives in 2015, including the CFO, resigned for personal reasons. The chief merchandiser resigned via an 8K filing. But more recently, and more importantly, we've noticed that the management team has a history of being associated with companies that have been plagued by accounting restatement. For example, the CEO has been involved at Kohl's. Kohl's had a lease accounting restatement. The CFO came from AC Moore. AC Moore took an inventory adjustment that basically obliterated their earnings from positive to negative. And more importantly, the chief accounting officer was at Timberland, which is a full accounting restatement under his tenure. So we get concerned when we see things like this.
Ben, you say the shares are priced for perfection. What sort of downside are we talking about here?
We're talking about 20 to 40% downside. We believe the sell-side analysts incorrectly position Burlington as a best-of-breed retailer akin to a TJ Maxx or Ross Stores. Realistically, we think the company, to close the operational gap that they have to peers, is going to have to spend hundreds of millions of dollars. Those companies trade at 20 times PE. We certainly don't believe Burlington should trade at a premium or in line with those peers, given all the concerns about management and the aggressive accounting that we've identified. So, taking a valuation discount and trimming some numbers next year, we get to 20 to 40% downside.
Well, take a dip into my terminal. Right now, the stock is trading just above $70, down about $15 in the last month or two alone. So it's possible that other people are also getting cold feet about Burlington. It is moving into some of the old stores that Filene's exited and that Kohl's has exited. It's continuing to be aggressive, particularly before the holiday season. Is this the right time to be shorting the stock?
I mean, we're not taking a macro view. We do, again, deep look at the numbers and look at the assumptions that are being used, and the obfuscation that we're finding really gives us cause for concern here. But I think a bigger picture, there's a lot of competition entering the space. So Burlington has benefited from some positive tailwinds that the discount retailers are gaining a little bit more share because the consumer's strapped. But as a result, some of the bigger department stores are now moving down market and now, vying for those precious real estate options options, and Ross Stores is looking to add 90 stores, and TJ Maxx is looking to double their footprint. Burlington's only looking to do 25 stores a year, and so they're competing for valuable real estate space, and we think, based upon some of our research, are going to have to pay more for those quality stores.
Then on a lighter note, why did you dedicate the research to your mother?
Thank you very much for asking. Unfortunately, my mother just lost her battle with cancer. She was a great inspiration in my life. She loved to shop, and so I thought I'd dedicate it to her.
And she shopped in Burlington Northern. She liked a discount, right?
She liked discount, but she liked Filene's basement TJ Maxx better.
All right. Well, we can't express an opinion. I'd like to express an opinion, but Ben, thanks for that. And just once again, we did contact Burlington and are waiting on a response. Spruce Point Capital Management's Ben Axler, 11 buys on that stock and 4 holds, 0 sells right now, Mark.
Right, coming up, Facebook's third quarter results beating analyst estimates. Shares are tumbling, trading at the lowest price since July. We'll take a look behind the numbers. This is Bloomberg.
Songs are my favorite. Oh, Elmo likes songs. Puzzles!
Me love puzzles.
Dinosaurs! Puppy!
Exactly. Learning starts with the things you like.
You don't get anywhere in life by sitting still. It's the doing that takes you forward. So whatever inspires you, this is the time to fulfill it.
Has been raised to 28%. The tax incidence overall should remain the same, and the balance amount on demerit goods, of course, will be charged to the additional cess, which will again feed into the compensation fund. So it's really the centre taking sort of a position where it's catered to the state's demands, but kept firm on that demand for a compensation cess, because remember, that's essentially what's crucial to funding whatever compensation the centre has to pay out for the next 5 years, without, of course, constricting its own fiscal space. And therefore, it's really been a good play here between the centre and the states in terms of the key demands, and really there has been a lot of agreement there, which is a good thing. The second major aspect of this GST Council meeting, and this is now something which really could be a make or break as far as that April 2017 deadline is concerned, is the question of dual control. You've got, like the Kerala Finance Minister, in fact, you've got state authorities now agitating in the centre, asking that their rights to tax must be, in fact, kept autonomous, kept protected. And there is that entire demand, the 1.5 crore rupee threshold, which the states are now stuck to. In fact, you remember the first meeting of the GST Council, there was actually an in-principle agreement that the centre would continue to have the existing service taxpayers, but the states have gone back on that since, and now the key demand coming from the states, in fact, will be that the states and the goods and services must both be shared with the centre and the states, and there should be a hard threshold of 1.5 crore rupees. This is not something which the centre is going to be okay with, and particularly big service providers like the internet services, banks, telecom companies, in fact, will have a lot of trouble dealing with this new regime as well. So it's going to be a tough call tomorrow between the centre and the states if the dual control issue is really resolved, whether at all the centre and the states can come to possibly another compromise like they have with the GST rates. But it's certainly going to be a tough one to look at if you look at tomorrow's proceedings. Back to you.
Tough consensus to come about on the rates, and I think the bigger thorn in the flesh is going to be the dual control. But thanks very much, Gaurang Sinha, for getting us those details. Hold your thoughts there, because we're going to grope in Sriram Iyer to make us understand how does this entire exercise on rates really impact consumers like us there, Sriram. Is it going to pinch me more, or should I be happy with this GST rate structure?
Supriya, as we've heard from person after person, from the Finance Ministry to the Chief Economic Advisor to the Finance Secretary, each one of them has tried to tell us that, the life doesn't change as much, because the government has tried to ensure it makes as much money as it does right now, while keeping the pinch on us just at the same level. Now, there are certain things that will change for sure. All product categories that are right now being taxed between 3 and 9% will fall into the 5% tax category. So some of those essential items, that the daily use items, some of them will get expensive, some of them will get cheaper, but the overall burden on you, like the Finance Minister pointed out, 50% of the CPI basket is zero tax. So essentially the idea is to curb inflation, keep it within controllable levels, and as well as make sure that the common man does not feel the pinch. Now, there are certain things that will get expensive. Actually, there are certain things that will get cheaper. cheaper. I want to highlight that first. One of them is the refrigerator. Some of the white goods which have right now been taxed at about 30-31%, they will fall to 28%, and Finance Minister has indicated that some of them will fall into 18%, and that will be a very good news when it actually happens. So refrigerator is one thing which is on the criteria, as sources have told us. Now, why is it going to happen? Because finance or rather the government believes that refrigerator is something that everyone needs one, and unlike an air conditioner, one thing that's going to get really expensive definitely is eating out. If my parents couldn't stop me from going to bars and restaurants, GST will, and it's been happening every year. 18% tax on services is really going to pinch hard for people who like to go out and eat every day. And Supriya, if you're planning your next big car, a Merc or a Jaguar or a BMW, your deadline is April 2017 because demerit tax.
I'm not planning either of that, but yes, what your folks couldn't control you to do, the finance minister certainly will. But thank you very much, Sriram Iyer and Gaurang Sinha, for breaking it down for us. As far as the GST is concerned, the big picture and the impact on you, the consumer, industry veterans, meanwhile, have their fingers crossed. Top chief executives tell ET now that the real impact will be known only after the final classification of categories is done.
I think overall these 4 rates are reasonable. However, the final point will lie on how various individual categories of products are put into each of the rates. That's very important. 28% is quite high, and I don't agree that the current rates are as high as 31%. It varies from product to product, but until we see the final actual fitment of each type of product into each rate category, it's difficult to comment. I don't believe that the compensation required will be anywhere near 50,000 crores, because what the government is forgetting, what the entire council is not taking sufficiently into account, is because of the nature of the GST, evasion of indirect taxes will come down dramatically. My expectation is collections will be huge. My expectation is that the states, by and large, except for 3 or 4 states, will not need to be compensated. So my feeling is these additional cess, and he has mentioned that also, that he would gradually take it off in 5 years' time, definitely. I hope it will come off soon because that's what is going to lead to a lot of economic development.
I think this 4-slab structure, or rather the 5-slab structure, including the 0, is a very good move. What it does is the government has managed to, at one hand, ensure revenue neutrality. On the other hand, it has ensured that the common man is protected from inflation. What will happen essentially is there will be alignment of the current tax incidence to the slabs because they are close to each other. More than anything else, I think overall it will make life simpler. And thirdly, a lot of FMCG players compete with a lot of unorganized players. I think with compliance, it will help. So I think it's a very good move for the industry. And the biggest thing which is important is that it has protected the common man from any inflation impact.
Impact on a company will once the classifications come out. So while the rate, while it is important, even more important is the classifications. Because in a company like ours, which has got such a wide array of products, ranging from Ayurvedic medicines to food and to cosmetics and toiletries, the classification assumes crucial implications. And as of now, there is really no clarity which we have in terms of what goes where. We'll know in a week's time, and that would really, we will know the impact on our company at that point in time. I think one can expect a fair amount of disruption, a fair amount of initial chaos when the GST implementation begins. We saw it in the VAT implementation, but hopefully things will settle down very quickly.
All right, to take that very special discussion forward on GST rates, where the consensus has finally been reached, we are joined by 3 very special guests. Sunil Kant Munjal, Swaminathan Iyer, and of course Mukesh Bhutani, who joins us all right here on ET Now. Thank you very much, each one of you, for being with us. Mr. Munjal, you've got your skin in the game, so to say. Must begin by talking to you about the slabs that have been decided. If you include the 0 rate, there are 5 slabs. So there is a multi-layered GST that we are perhaps going to see. One wasn't expecting a utopian 1-rate GST, but are 5 slabs a tad too much, or do you believe this is a political reality and one can't hide away from it?
So first, I think there's a collective sigh of relief and also a sense of achievement for India as a nation to have got where we have today. After a long journey, it now looks like the finishing line is genuinely close. To go back to your question on rates, the original recommendations, if you remember, were actually 3 slabs. One slab which would have been the standard rate, one for concessional rate of goods, and one for a higher slab for those goods which need to be taxed higher. And the idea at that point was there would be very, very few which would be in the higher and the lower. The bulk of them would be at one tax rate to make it simple. But one of the earlier speakers made an important point to say this is also, the attempt has also been to satisfy all categories of consumers in the country. So if you can move the tax rate to the closest to where it is right now, the people would obviously feel the least amount of pinch in the transition. There is going to be some pain in transition, for sure. But I'm not even sure whether this is a revenue neutral rate because we don't quite know what would go into which slab in terms of the tax rates. I guess one needs to see the fine print, and only once the details are out can we figure out how the overall basket is going to tax the consumer of all kinds of goods. The sensible thing that has also been done is to remove a bulk of the items which go into the CPI index. About half of them, I'm told, will have zero tax. So at the bottom end, it is almost certainly not going to be inflationary. But it's still important to see how it pans out over the next few days as we get more details.
It's a fair point indeed. At the bottom of it, there is a zero rate, and they're saying that we're not calling this exempted, we're calling it a zero rate. Swami, come in on that because, you know, economists like yourself were talking about, we were talking about a transparent GST, a simpler GST, a GST that makes India one tax, one nation. But these are 5 slabs that we're talking about. Do you believe the government, both in the center and the states, have perhaps done what was politically palatable to do? You cannot ignore the realities of a country like India, even though you're trying to change your entire taxation system. Could one have done without these multi-slabs that we are now seeing?
Well, let's just say that I'm glad that we've managed to take this one step forward. But as Vijay Kelkar said, we ultimately need to move towards one single rate. And when you see where we are and where we are going to get, we are just at the start of a very long journey. So GST is not one single act. It is a process. We have just made a start. As you say, 5 slabs is much too much. And it's even more than 5 slabs, really. I mean, there are 4 slabs. There is zero rating. There's going to be something different for gold. There is going to be the cesses. There is going to be separate state tax on oil. I don't know where it's all going to end. The states are going to demand, in the name of flexibility, I think, a constant attempt to get additional either tax breaks or additional tax levies. The politics as it plays out today has been about every budget speech wooing this vote bank or wooing that vote bank. If suddenly you now say all the rates are fixed, I can't give any tax breaks, I can't give anything here, will that play politically, or will you begin to see sabotage of GST by the state governments and maybe even some departures in the center? I think this is the biggest political question which has not been attacked. This is not a technocratic issue ultimately. The thing ultimately is, are politicians willing to say that the days of playing games with vote banks are over, the rates are now fixed, and we are going to stick to this, and if possible collapse them into an even smaller number of rates. That is the proper technocratic way to go. It does not seem to me it is the way politicians want it to go. So if indeed this GST is going to be a success, it will require much greater discipline and a much greater understanding of the fiscal issues by the politicians concerned. I will merely say that I would agree with some people that the actual tax revenue that you get may be so much more than you expected that things will work out okay. At the same time, Vijay Kelkar has warned that compensation must not be given in full to the states, otherwise they will lose the incentive to implement this properly. All kinds of calculations of revenue neutrality are being assumed on the basis of proper implementation, which you cannot take for granted. So we need to have proper implementation, and for that, as Vijay Kelkar said, don't give full compensation. Give substantial compensation, but let them have an incentive to go and implement these things properly. So as I said, we are at the start of a long journey. I think this is a decent first step to go, but there is many more steps to go, and the most important are not technocratic, the most important are political.
Indeed, the most important are political, and I must ask the uncomfortable question then, and Mukesh Bhutani, that's coming your way. Corporate after corporate, and I think Mr. Munjal mentioned that as well, you need to know the classification of categories. The question really is, with that 28% bracket there and having a cess, I'm going to discuss that in more detail. How is one going to distinguish between luxury cars and other cars? Is a Scorpio a luxury car? Is a Beamer a luxury car? And how do you also differentiate whether there's going to be a level playing field between bidis and cigarettes? On what basis will this classification be done? And don't you believe that will perhaps add to the problem, at least at the highest rate slab?
Absolutely, and that's the reason I said that I am opposed to the idea of cess, not because there is no precedence in the indirect tax policy elsewhere in the world to levy some form of a cess on demerit goods. But the question is, for India, what is a demerit good? If you are going to say that cars above 2000 cc engine or cars that exceed length of so many meters is classified as a luxury car and it's going to be taxed now as a demerit good, then what are you doing about it? And if you're doing it, then why aren't you allowing credit for those cess? That's exactly the problem. If you look at why our indirect tax system has been inefficient, why there are so many disputes insofar as service tax law is concerned, besides the dispute that arises out of rates of tax, it's classification issues. So what falls in the demerit category and what kind of car is a luxury car will give rise to classification issues and will give rise to disputes. And instead, what was being suggested is that if the only formula that the government wants to work to be able to compensate, or primarily with an objective to compensate the state government, is to levy cess, then in that case have a clearly articulated demerit goods. Don't try and push everything over there just because it is beyond the reach of the common man. So what happens if you start classifying now cell phones that cost above 30,000 rupees in the demerit category? Nothing stops them from doing that. You can say that the common man can afford a cell phone of only 10 to 15,000 rupees. I'm going to put down now cell phone above 30,000 rupees in the demerit goods. What happens then to that industry? Uncertainty and a classification dispute that could arise. So I absolutely agree with you that what is to be classified as a luxury car is undefined, and that's the reason I'm opposed to the idea of a cess.
Hold your thoughts there, and now that you've raised the point about cess, I must get Mr. Munjal to answer that question. Mr. Munjal, so much was written and said by economists and experts like yourselves about there should be a tax, and cess is not the most transparent way, but it looks like policymakers both at the center and the state level have decided to throw their weight behind cess. At least on demerit goods, there will be a cess, and that kitty is going to be used for compensation. Hopefully, it will not be required going forward because compliance will take care of the issue. But are you someone who also objects to cess? I mean, I know Mr. Bhutani has a very strong view on that, but some other experts who joined on the channel said cess is perhaps a safer option that the government has taken, because anything on tax would have made the government levy the tax a lot more. 50% would have gone to the states, and the center would have got 50%, out of which 42% would have again been devolved to the states. And so the net impact of a tax would have been very high on the common man. Are you someone who objects to cess, or would you have still wanted a tax?
So in principle, there is always an objection to cess, for the very reason that Mukesh just mentioned, that it creates a cascading impact, and it also causes confusion as to classifications. However, having said that, I would say if the government and the states collectively agree that this is a temporary measure and would be moderated each year to take into account how much compensation is required by the state. So it should be set subsequently for the future years and phased out in the next 3 to 4 years, because there is no compensation going out after the year 5. If it is clearly defined as a temporary measure and also very clearly defined upfront as to how this will be treated, what will get categorized, so there's transparency and we don't end up creating an additional problem, because the whole idea of the GST is to simplify taxes, not to complicate them. As it is, we have a multitude of taxes. I think Swami or somebody just mentioned that actually it's not 5, it's actually 8 or 9 categories, by the way, in all, if you look at this, some of the exempt items, some which are yet to be defined. So we need to find ways to not complicate it more than it already is at this moment. The whole idea of a GST is to improve compliance, to widen the tax base. The logic is quite clear. CES actually militates against this logic, which is why there is a problem with CES. But as a temporary measure, I would still support it as possibly one of the possible options for compensation of the states in case there is shortfall. And again, I'm not even sure there'll be shortfall after year 2, because if it's properly implemented, the expectation is there would be buoyancy in the revenues, and they would actually end up collecting more than they are right now.
Indeed, many people believe compliance is going to lead to that. Swami, you know, the politically uncomfortable question is, and I know some quarters of Indian industry raised this on the show a little early on, that the desirable situation will be to see these rates converge, to see the multiple slabs that are there converge into a single or at max a double rate. Do you see political palatability to that move?
As I see the politics today, there is no chance of it converging. It is highly desirable. Vijay Kelkar had pointed out that if you have one single rate rather than 4 rates, the addition to GDP becomes 4 times higher. By having 4 rates instead of 1, you are losing 75% of the boost to GSP. And yet, as you can see, the demand is for more and more and more rates. Why? For that, I mean, when I went down to Tamil Nadu for the last state election, there was Amma wanting to give this scheme and that scheme and one more Amma scheme and one more Amma sanitary napkin and Amma kitchen and Amma's this and Amma that. Now, the tendency of politics is to have more and more giveaways, more and more tax breaks, more and more subsidies. That political culture, to me, does not sit well with this technocratic frame that has come out. I am in fact astonished that therefore we have got so far. I think it is a fantastic advance that we have got this far, that we are limiting ourselves to this number of rates, suboptimal though it is. Will we manage to get convergence closer? The question that you have asked, I would find that very difficult to believe in the foreseeable future. My real fear is that some state governments will find ways to sabotage it and begin to have even more multiple rates.
All right, even more multiple rates. Forget about these converging. But Mukesh Bhutani, just wanted to quickly touch upon the impact that the rate structure today will have on consumption patterns. I know classification of categories has not been done yet, but there are largely rates out there, and one does know what will fall where. What sort of an impact do you see this happening on both consumers and also corporates?
Now let's look at what the current scenario is today. The current scenario is today that there are certain items which are the common man goods item that are taxed between 3 to 9%. They all will fall under the 5% bracket. Then there are items that are taxed between 9 to 15%. They will fall in the 12% bracket. And then there are products that are currently taxed between 15 and 21%. That will continue to be levied tax at 18%. While the products that are taxed at 21% will go up to 28%. So you will be able to assess the impact only after you know what goods we are talking about. I also heard that there are certain items which were falling in the 18% list are being moved to the 12%. I would presume that those are for the common man as such. But until and unless you look at that list, you will not be able to assess the impact as such. Point number 1. Point number 2, you will need to look at the benefits of a GST system over a period of time. As the credit mechanisms improve, or in other words, the credits which are getting lost today as a result of many levies by the state government, be it by way of octroi or entry tax, and you will be able to assess what is the overall effective rate that gets passed on to the final consumer. That's the first point. The second aspect is if there is going to be a reduction in transaction cost because you're looking at a borderless levy or a one nation levy, then those also will need to be factored in. There could be savings arising out of that as well. So it's a combination of effective reduction or increase in the tax insofar as the final consumer is concerned, and over a period of time the supply chain efficiencies that you will be able to derive as a result of reduction in the transaction cost. And then only it will play out whether the GST system has resulted in a lesser burden to the consumer or higher burden in certain categories.
All right, I'm running out of time here and we'll let Mr. Munjal have the final word on this one. April 1, 2017 is a desirable deadline, but what if it is not met? Do you believe it will be in the interest of the government to push it by a year, or can October 1 or any time mid-year be a doable thing? As a member of the Indian industry, I'm asking you that question.
So what we had earlier said, Supriya, was that ideal situation is to start of the year, but we can move it to any of the next quarters after that, because accounting by companies is done by quarters. And at this moment, it looks like it's actually possible, by the way, to implement in April. If the central government takes up both the GST and the IGST in the November session starting in the next 10 days, and then the states simultaneously, because they have responded quite positively. So this is actually full marks, by the way, to the GST Council and to the Finance Minister in pushing this collectively to get it to this point. I think it does need the last push, and I will make one slight change from what I think Swami just said. I think we're all relieved, and we are willing to accept an imperfect system to get this off the ground. Because once people and the companies and the states and the government start to see the benefit, I think people will start to look at more efficiencies in the system, and then possibly also over a period of time, alignment towards lesser number of slabs and rates.
All right, I was tempted to give you the last word, but Swami, you want to come in on that? Do you believe April 1, 2017 is a sacrosanct deadline, or do you believe any time within the year, if the government gets its act together, is doable?
As I said, GST is a process and not an act. So frankly, it doesn't matter which day you start, there is going to be a mess. There are going to be all kinds of glitches. So since that's going to happen, whether you have it on 1st April, 1st June, 1st October, you might as well start it on 1st April. I think that's the way to go. I'm impressed at the speed with which the GST Council and Mr. Jaitley are proceeding. I am impressed that it appears that these two crucial pieces of legislation will be passed in the winter session of Parliament. So whatever imperfect system we have on April 1st, I would say, let us go with it.
All right, let us go with it. Thanks very much then, all of you gentlemen, for joining us right here on India Tonight. The Voices That Matter, Sunil Kant Munjal, Swaminathan Iyer and Mukesh Bhutani. Thanks very much for being with us as we discuss and debate the big GST rates that have been decided today.
Today we spent the whole day discussing the rate structure and the mode of generating the compensation amount.
The whole exercise is revenue neutral. It's protecting people at the lower end.
It's an important decision that there'll be no exempted goods. All goods that are like food grains and essentials and basics will be at 0% GST.
Central government is supposed to mobilize something like 55,000 crores of rupees, which they feel would be required for compensation.
मुझे लगता है कि ये सारा का सारे पर जो राज्यों ने अपनी राय व्यक्त की सब उस पर संतुष्ट थे और सबकी आम सहमति थी.
All right, coming up right here on India Tonight, we're going to get you a power pack lineup. In the ongoing Tata Docomo tussle, the government refuses to change its stance despite the biggest shake-up scene at Bombay House. Hillary takes the lead back from Donald Trump as the race for the White House goes down to the wire. And the opposition party